2019, and interesting week, very interesting week. Obviously, we're off here in London yesterday because of bank holiday, but that was a comment by Donald Trump on Sunday, and then that was a big and very interesting move in the stock markets. The Russell 2000 at one point was down, I think, by 2.17%, wiped out most of, I think, a good amount of stops as price slipped below Friday's low. And this followed actually after a breakout from our major head and shoulders. But then, before the day was over, the price had once again sort of risen and confirmed a bullish breakout in the Russell 2000. So we're going to talk a bit about that because, as you know, I did an update on that and put that on YouTube over the last few weeks. So we're going to talk about that, and then we're going to also take a look at some of the other markets. But I think it makes the most amount of sense to start out with stock markets and with the Russell 2000. So we're going to start with that one, okay? So this is the Russell 2000. And the reason actually we're starting out with this one is just because it had sort of the most violent moves, really. So this is the CFD on the Russell 2000. And as you know, I've been bullish here for quite some time because we do have what we call a head and shoulders, left and a right shoulder, and this is your head. And the break to the upside here suggests that the market could rally with about 350 points or 28%. That will be on a break to this level up here, the neckline. And that, as you can see, it did trade higher on Friday, but I didn't take any positions on Friday, and because I didn't think it was going to have, I thought it was going to be one of these sort of typical days where the market just triggers a bunch of stop loss orders, which it did, and then just goes back down lower again. I did not think that the market will close up here, and it did so, and I'm like, all right, I'm gonna try to buy this on Monday, but I'm quite happy actually I didn't buy on Friday, because my stop would have been down here somewhere and I would have been wiped out, not wiped out, but that position would have been stopped out as the market opened, because the market open is sort of gap down here, went all the way up, closed that gap. Now the way this closed, this is a very bullish candle at the end of the day, and this is at the end of the day a breakout from a head and shoulders pattern. So I think it makes perfect sense to remain bullish and to anticipate this to trade higher, especially if we take out yesterday's high. I think that's because I'm not in any position right now. I think if we took out that high, I think that is when it becomes interesting for me, at least, to add a bit of risk. But there's some huge challenges here and huge problems, because the way things look right now, the on Wednesday, so tomorrow, the US and American delegation are gonna meet again and talk, as far as I understand. And you know, if nothing happens, if there's no conclusive moves towards some sort of a deal, then it's not gonna be possible for maybe Donald Trump to say on Friday, look, we're not gonna introduce tariffs. And that is the big problem right now. If they actually go ahead and introduce tariffs, I think the market would again gap lower, so sort of start Sunday at much lower levels. Alternatively, if they over the weekend shake hands, nice little picture, things are amazing, then you know we're gonna be trading up here somewhere. So we're gonna be gapping up with 2-3%. So it's a very, very difficult situation here for traders, and you just need to bear in mind your risk, and if you actually want to hold on to a position over the weekend. Like in my case, if I would go long on the breakout, I probably would not keep the position over for the weekend unless we get some nice signs ahead of the weekend that you know, Donald Trump and the Chinese government is ready to sort of make some good of deal here. As far as I understand it, according to an article in the Financial Times, it's not officially, but according to what's happening is that the Chinese before were happy to put into law to sort of get rid of technology transfers, and now they're considering to maybe make it into some changes in regulations instead of actually putting into law that, and that is obviously the big sticking point. And that's also really important, because as I've been saying before, I know there's a lot of skeptical people out there, but we need to just sort of, you just need to understand how this market game or this works. It's more of, we need to understand how the market works and understand how people react, rather than trying to understand what makes logical sense all the time. Because, for example, a lot of people, especially the bears, said, well, look, the markets are higher because of debt. Okay, that's true. And of course, debt can deflate and people can default, right? All of that is all true. But the problem is when you have these debt cycles kicking off, they continue for weeks, months, and years, right? So you can't just sort of do like this and say, no, I'm not going to trade like a little child. You can't do that. If you into this, you need to understand that that's a cycle that's going to continue for years many times, and that's something that we need to take advantage of. This is just the way the market works, and you need to understand the rules of the market and just play better than everybody else. We can't just say, lol, I'm not going to go long because this is all debit fuel. Without the debt, we wouldn't have like these markets at these levels. Everybody else is getting richer by going along the stock markets, and you're not buying it. In fact, you're selling it, so you're getting poorer in the process. I mean, that seems to be the attitude, and what I think is happening to a lot of these bearish investors and traders out there. So that's not the way to operate. We go with the trend, we go with the flow, and then until proven otherwise, we let the stop loss get us out. We'll lose a few percent at the end, but hopefully the market rallied and you get some nice profits on the way. That's the way I like to look at the markets, and that's sort of I want to be, because we need to be pragmatical here, not about some fancy theory somewhere that someone says is going to influence the markets. It's all about looking at the figures, looking at the markets, what's going to happen. And as I said before, I think people are vastly underestimating how this deal could play out. If a company can set up business in China by itself, hire its own staff, bring its own people in, and do business, then that's going to help. Because right now, as far as I understand it, and not that I'm an expert on China's economy and how things work over there, but you need to have a local partner. I have also tried to do business in mainland China before, and some of the quotes they send to you are ridiculous. What if you don't have to have a partner in China? Then things that you before did not want to produce there because of technology transfers, you can suddenly produce them. And it's not the cheap stuff, right? Because the cheap stuff, okay, you'll do it there anyway. It's probably something relatively sophisticated, and that could potentially sort of cause a lot of efficiencies and makes these corporations in the S&P 500 and the Russell 2000 more profitable, and that is what is important. And companies being profitable is very different to the people on the street being profitable, because this is a reflection of how companies are making money, not necessarily what the average man has been doing. Because the average man, as we know, in the United States of America hasn't seen any proper salary increases since the 1980s. Of course, we've seen salary increases now, but if we look at some charts, which I did a few years ago, you will see that the lower salary has been flatlined like that for about 20 years. So bear that in mind. Important to be extremely pragmatic. Okay, as for the euro versus the USD, we're dealing with a downtrend here still. Last week I said after this big candle, I said we could probably go a little bit lower, which we did on May 2nd, and then on May 3rd, on Friday, we tested lows, and then we bounced back up again. Now, we don't have a big strong trend here to work with, and I think we can go lower. But it's not a strong trend, so I would not focus too much on this market. But it is bearish below 112.65. GBP versus the USD. The trend is bullish above 12.86, and I think people are probably going to be buying at 113.43 if they can. As you might remember from last week, I said if we have a 61.8% correction, I think people are going to buy. So that was down here somewhere, and then but the market didn't go there. It just went 50%. So less than 50%, and then the market bounced. So dollar versus the Japanese yen is trading sideways between 109.70 and 112.15. Price did trade below the right shoulder, so the trend is no longer bullish as it used to be, but it's not also extremely bearish. You can't really see massive selling here, especially with stock markets doing the way they're trading the way they're trading. So I wouldn't get too excited here. I think we'll probably continue to trade sideways. It might just try to form a base at a lower level. Let's move along here. Gold prices continue to be bearish. As you might remember, the market retested this head and shoulders and then moved down, and now it's going upwards again. And it's a tricky situation because if tariffs are introduced, which they look like they're going to be now, I think stock markets are going to be in trouble. And if stock markets indeed are in trouble, then we could probably have a break to 1288.83, as people are going to sort of hedge by being long gold. So they go long here and they short stock markets, alternatively just short stocks and go long here. So these are negatively correlated, but for now, with stock markets recuperating, this remains relatively capped by this high, and I want to continue to be bearish really, and I think we can go down to 1265.83, take out the lows, potentially lower. Crude oil prices. So the last setup I shared with you guys was to short sell. Let me change here. This is 6 hour. The last idea I shared with you guys was to sell here at 62.32, which is here. The market moved up and then went lower and touched the first target, and then recuperated sharply, but again it's moving away from this area, and as long as it's below 63.91, I'm gonna be bearish. I think we can retest the lows. As for the S&P 500, I think here it makes sense to let this market settle. Take out 2958.8 and the trend turns bullish. Until that happens, I think we can probably go lower, maybe to 2889.2. But again, it's not this, well, not again, but this is not necessarily the best market to short. If you really want to short, you want to look for a market that was ready to trade lower before we even had these bearish news. And then this is the German DAX. So the German DAX, as you know, it touched the target that we discussed on April 2nd. We said we can probably go up to these highs from September 2018. We reached those levels on Friday. There would have been a nice solid risk reward ratio on that. Let's figure out what that was. So if we would have gone long on the breakout, stop loss below the breakout candle, would have been a nice solid 5.51. I think at the time we had the stop loss slightly lower, so maybe 3.82 or almost 4 times risk reward ratio. As for this going forward, we're still dealing with a massive head and shoulders, and we could still trade much higher to something like 13,088, but I think we need that pullback, maybe from 12,071. Traders might go long with stop loss orders just below here, then target those highs. So I would wait for that pullback. Alternatively, maybe early next week, if we know that if they introduced tariffs or not, potentially turning bullish on a break to 12,464. And that, guys, is today's market update. Let's see if you guys have any questions at all. We got a Swam here, Mansour. Okay, he says, please chart not clear, please adjust it. So the charts are looking awesome on my side. Maybe you can change the settings here. On these settings, you can change the quality. So depending on what type of internet you have, you can choose HD, which gives you the best resolution. Sometimes as well, like if you have issues watching it live, you can always just wait for the recording. Okay, we don't have any questions, so I think we're gonna wrap things up. Guys, don't forget to like that video. Let's get this presentation trending. It's very straightforward. There is this little button here. You click on that and we get a like on this video as well. Don't forget, you can click on the share button here. You can share it on Facebook, Twitter, Blogger, and Reddit and Tumblr. Or if you just want the link, just click copy here and you can just post that. Why is this important? Well, the more you share, the more we care here at ATFX. So it's really important seeing you know, the more and more people watching this, because then we know we're doing the right thing. If not, obviously, maybe we need to do something else with our time. Okay, Marvin says charts are good on my end. Thanks so much for that confirmation, Marvin. And thanks so much for all those likes. I really appreciate it, Marvin. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow, same time here at ATFX YouTube channel. During the day as well, don't forget to check out my Twitter if I post any updates and charts. If you're not watching this, if you don't know about me, this is my Twitter handle at AlexFX 00. As well, if you don't know about ATFX, then you know what? I do understand that. It's a relatively new broker here in the UK, but they've been around for some time, and they're relatively big in China and Southeast Asia. Very, very good, nice competitive spreads. In essence, on the Edge account, which is this one here, Retail Edge account, you actually get those spreads you get there are very similar to the spreads you would get if you were having a 25K account with some of the other big brokers. As well, you get access to coaching sessions with me. So if you do open up a Retail Edge account, then we get some coaching. Okay, guys, thanks so much for watching, and I'll see you guys same time tomorrow. Bye-bye.